Welcome to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 18th, 2025, we're dissecting one of the most talked about stocks, Tesla, ticker Tesla. The news surrounding Tesla right now is a mixed bag, indicating significant volatility and key drivers. Just hours ago, Yahoo Finance reported a positive catalyst. Tesla stock is rising as the U.S. imposes a hefty 160% graphite tariff on China. This move likely benefits domestic battery and EV production, a clear tailwind for Tesla. However, competition is heating up, with the Motley Fool highlighting Rivian's new R2 truck as a potential Tesla-like turning point for that company, suggesting future market share challenges for Tesla. CNBC and Robinhood indicate Tesla is currently trading around $322 to $329, showing a strong intraday gain of over 3% today, signaling robust buying activity. Yet, Investopedia notes that analysts are divided, with an average price target suggesting a potential decline, setting up a contentious backdrop. A major event on the horizon is Tesla's earnings call, slated for July 23rd, which Barcart.com urges investors to mark on their calendars. This call will be critical in confirming or refuting some of the current market sentiments. On the bullish side, Cathie Wood's ARK Invest recently acquired over $36 million worth of Tesla shares, demonstrating high conviction ahead of earnings. This institutional backing from a prominent tech investor often inspires confidence among retail traders. Long-term narratives like Tesla's Robotaxi potential, with Cathie Wood envisioning a nearly 1,000% stock price increase by 2040 and over 90% of company revenues from this service, continue to fuel optimism. Initial Cybercab operations are reportedly planned for June in Austin using FSD-equipped Model Ys, pushing the innovation narrative. Conversely, the company has faced headwinds, including a significant 21.3% plummet in the first half of 2025, as reported by the Motley Fool, alongside current sales declines in its core EV business. This mixed fundamental picture is a crucial context for understanding the price action we're seeing. Now, let's turn our attention to the charts to see how these events have manifested in price, starting with the daily view over the past year. Looking at the one-day chart, we can observe the broader trends shaping TSLA's performance. From March 2024, Tesla was trading around the $160 to $180 range, finding strong support around $160. A significant rebound in late April saw the stock push towards the $190s, indicating a potential bottoming pattern at that time. The period from November to December 2024 witnessed a remarkable bullish surge, pushing Tesla from the mid-$200s all the way to its 52-week high near $488.54. This was a clear long-term uptrend, potentially driven by strong delivery numbers or optimistic forward guidance. However, the first half of 2025 painted a very different picture, with a sharp reversal from the December peak. The stock experienced a significant downtrend, plummeting to lows around $220 in March 2025. This aligns perfectly with the news mentioning a 21.3% decline in H1 2025, reflecting broader market concerns or company-specific challenges in core EV sales. We saw attempts at recovery in April, with a bounce back towards the $280s. But this level soon turned into a resistance, leading to another dip. Then, a strong move from late April into early May pushed the price above $300, establishing a new, albeit volatile, trading range. The daily candle for June 5, 2025, shows a notable drop from $322 to $284, a massive single-day decline. This could be correlated with mounting concerns over EV demand or initial reactions to news like the Rivian R2, creating a clear bearish impulse. Following this, Tesla has staged a comeback, slowly reclaiming lost ground. The July 17, 2025, daily candle closed around $319.41, showing a steady climb over recent sessions. Now, here's a critical point. While the provided daily data shows the July 18th candle opening around $251 and closing around $249, implying a significant gap down and further decline. This contradicts the real-time news. The latest reports from CNBC and Yahoo Finance for today, July 18, 2025, indicate Tesla is trading much higher, between $322 and $329, and is actively rising. This suggests extreme intraday volatility on July 18th, with a powerful rebound from an early session low, or that the provided daily candle represents an older snapshot. For traders, this highlights the importance of real-time data and adapting to rapidly changing market conditions, especially around news events. The area around $280 has proven to be a key support zone multiple times, notably in June 2025 after that sharp decline. Conversely, resistance levels have emerged around $350 to $360, which marked highs in May 2025. Let's zoom into the 1-hour chart to examine the recent price action, particularly since late June. On the 1-hour chart, the June 5th sharp sell-off is clearly visible, marking a significant bearish divergence. After hitting a low near $281 in early June, Tesla began to consolidate and then slowly trend upwards. We can see a clear pattern of higher lows and higher highs forming from June 9th onwards, indicating a short-term bullish trend. The breakout above $300 resistance in early July was a strong signal of renewed buying interest. This rally took the price back above the $315 level by July 14th, setting up the context for the current day's trading. The hourly chart confirms the consistent upward pressure leading into July 17th's close. Now, let's narrow our focus even further to the 15-minute chart to observe the most recent intraday movements up to July 17th's close. On the 15-minute chart, we gain granular insight into the price dynamics of July 14th to 17th. We can observe consistent trading above the $315 mark, with minor pullbacks quickly finding buyers. The price action on July 17th shows a battle around the $320 to $322 level for much of the day. Towards the latter part of the trading day on July 17th, the price hovered just below $320, ending the day at approximately $319.45. This tight range and slight consolidation near resistance suggests the market was absorbing recent gains and preparing for the next move. The volumes on these shorter timeframes are substantial, especially around key price tests, which suggests active participation from both buyers and sellers. For today, July 18th, despite the early daily candle showing a dip, the current news reported price of $320 to $330 implies a powerful intraday reversal and sustained buying pressure. This kind of price action, where news overrides early chart signals, points to a strong underlying narrative, likely the graphite tariff news overriding any initial sales concerns or profit-taking. So, what does this all mean for trading Tesla? In the short term, the immediate focus is on the current price range of $320 to $330. If Tesla can consolidate and hold above $320, it confirms strong immediate support following today's rebound. A break above $330 with conviction and higher volume would signal further upside potential, possibly targeting the previous resistance around $350 to $360. However, if the stock fails to hold these levels and drops back towards the lower $300s, especially given the conflicted daily candle data, it could indicate lingering bearish sentiment or profit-taking into earnings. Long-term, reasons to be bullish revolve around Tesla's innovation in Robotaxi and AI, as emphasized by Cathie Wood's vision. The company's strong capital advantages give it a substantial runway to develop these technologies, even if current EV sales face headwinds. Geopolitical shifts such as the graphite tariffs and India expansion plans also present long-term growth opportunities. However, long-term bearish arguments stem from increasing competition in the EV space and the uncertainty of future earnings, especially if core vehicle sales continue to disappoint. The analyst's split on price targets also suggests caution. Key levels to watch are the recent strong support at $280, a psychological and technical floor. On the upside, the $350 to $360 range is a significant resistance, and breaking this would require substantial buying power. The all-time high of $488.54 remains a distant but achievable target if bullish catalysts like Robotaxi come to fruition. For short-term traders, keep a close eye on the volume accompanying price movements around the $320 and $330 levels today and tomorrow. High volume on upticks confirms buying interest, while high volume on downticks signals selling pressure. Volatility is likely to remain high leading into the July 23rd earnings call, which will be the next major catalyst. Unbiased predictions suggest that if earnings beat expectations, especially with positive forward guidance on Robotaxi, a move towards $350 is highly likely. Conversely, a miss, particularly on core EV sales, could see Tesla retest the $300 or even $280 support levels, with a 60% likelihood of significant movement post-earnings. Always remember to manage your risk and consider your investment horizon when trading a volatile stock like Tesla. We'll continue to track TSLA's performance here on Explain the Charts, so make sure to subscribe and hit that notification bell for our next update.